Get ready for breaking news. Argentina's President Javier Milei has just signed a critical decree linking state asset privatizations directly to military rearmament, sparking massive questions about the nation's defense strategy. This sweeping measure, under the Argentine Military Adaptation and Reequipping Plan, dictates that 10% of revenue from state property sales will fund the Ministry of Defense, potentially skyrocketing to 70% if the assets were previously under that ministry's jurisdiction. We dive deep into what this means for Argentina's military capabilities and the geopolitical tensions driving this massive financial shift.
Never get caught with a dead phone again. This INIU portable charger is compact, travel-friendly, and gives you fast 45-watt charging with a built-in USB-C cable, so there's no need to carry extra cords. With 10,000 mAh power, it's perfect for busy days, trips, emergencies, or anytime your battery drops too low. Grab yours on Amazon through the link in the comments before your phone hits 1%.
Next up, we switch gears completely to the world of professional evolution. Artificial intelligence is no longer optional. It is an unavoidable force multiplier in the accounting world, and firm leaders are engaged in a fierce arms race to adopt this technology. We look at how firms like Anshin and Seidel Schroeder are using AI to streamline routine tasks, shifting their focus from compliance shops to high-value advisory roles, and the crucial debate between building versus buying AI tools. The professional landscape is changing fast, and we see it in action with major players like Big Four firm KPMG fully integrating AI into their entire business strategy. We explore how leaders are moving from asking, "What is the answer?" to "Here is the answer. Why?" And the intense investment plans from firms like Grant Thornton and RSM, pouring billions into AI over the next few years to stay ahead of this technological curve. And finally, we look at the markets as shares take a hit. ARM Holdings PLC-sponsored ADR stock dropped nearly 4% today, trading down to $203.26, despite some positive analyst upgrades. We examine the recent research reports from Susquehanna and Royal Bank of Canada, and what the insider selling by CEO René A. Haas tells us about the current sentiment surrounding this global semiconductor giant. Stay with us as we break down the latest market movements. Argentina's President Javier Milei has enacted a sweeping decree linking the privatization of state assets directly to the rearmament of the armed forces, sparking intense debate over the administration's strategic priorities amidst escalating geopolitical tensions. Under the new Argentine Military Adaptation and Reequipping Plan, resources generated from selling national state properties will be the primary funding source for restoring operational capabilities, developing strategic infrastructure, and modernizing military equipment. The decree mandates that 10% of the income from the sale or concession of state properties will be allocated to the Ministry of Defense. This percentage escalates to 70% if the sold assets were previously under the ministry's jurisdiction. Furthermore, revenue from the controversial bases law privatization efforts will also contribute, with 10% of those proceeds directed toward military reequipment. While these funds are intended to complement the existing National Defense Fund, they will be exclusively channeled into technological modernization, infrastructure projects, and enhancing national defense capabilities. Milei's administration justifies this aggressive stance by citing widespread deterioration of military equipment, the necessity to adapt to new threats like cyber attacks and asymmetric conflicts, and chronic budget constraints. The decree requires the Joint Staff of the Armed Forces to submit a list of urgent equipment and capability needs within 90 days for evaluation by the Ministry of Defense. However, the specific adversary justifying this massive rearmament effort remains unclear, particularly given ongoing warnings regarding maritime spaces in the southern zone. This raises critical questions about Argentina's long-term strategic goals in a region marked by persistent diplomatic friction over boundaries, southern sovereignty, and strategic projection towards Antarctica. These defense policy moves occur against a backdrop of significant international controversy. Earlier in the year, suspicions arose regarding a potential foreign policy operation involving the port of Ushuaia, fueled by reports of a Boeing C-40 Clipper landing in the southern capital, which prompted cautious statements from the U.S. Embassy. Additionally, recent statements by the head of Argentina's Naval Hydrography Service have ignited disputes over Chilean sovereignty concerning the Strait of Magellan, with Argentine officials asserting claims over the strait's mouth, prompting demands from opposition groups to defend Chilean territorial integrity. Buffalo Sabres forward Sam Carrick is on track for a return to practice as he progresses in his recovery from a left arm injury. Carrick, 34, was initially projected to miss the Eastern Conference second-round playoff series against the Montreal Canadiens, a series set to begin Wednesday night in Buffalo. Sabres coach Lindy Ruff confirmed on Monday that Carrick is seeing doctors today and believes he is recovering faster than previously indicated. Ruff stated, "So with good news, he could join our team back in practice tomorrow, which is great news. That would put him a little bit ahead of schedule." Carrick has not participated in practice or games since sustaining the injury during a fight on March 31 against the New York Islanders. Acquired from the New York Rangers at the trade deadline, Carrick has contributed 5 goals and 1 assist in 13 games for the Sabres. His career statistics include 89 points, 43 goals, 46 assists, and 439 penalty minutes across 393 career games with the Toronto Maple Leafs, Anaheim Ducks, Edmonton Oilers, Rangers, and the Sabres. The accounting profession is engaged in a fierce AI arms race, with firm leaders rapidly adopting artificial intelligence to drive efficiency and redefine their service models. AI is already being deployed across various levels of firms for routine tasks such as research, drafting, analysis, and administration, aiming to boost consistency and allow professionals to focus on higher priority, judgment-based work. While the largest firms are investing millions, smaller entities are adopting a more measured approach. Leaders view AI as a force multiplier, not a replacement, focusing on eliminating administrative burden to transition the profession from compliance shops to advisory services. This shift is also altering knowledge testing, moving from "what is the answer" to "here is the answer, why?" The build or buy debate is central to the strategy. Most firms are opting to buy software solutions for faster, cheaper implementation, leveraging proven patterns and industry assets. Conversely, some, like Virginia-based Ascend, are investing heavily in building proprietary tools in-house, using scale to become first movers in intellectual property development. Big Four firms, such as KPMG, are integrating AI as a foundational business strategy across services, delivery, and people development, viewing it as essential for quality and efficiency. Firms are also focusing on how AI changes service delivery, with some aiming to increase revenue without adding headcount by streamlining manual processes. Strategies for capturing value are emerging, with some firms purchasing specialized tax and audit programs to offset technology costs and maintain fee structures. Governance and risk management remain paramount. Leaders are embracing AI with cautious optimism, prioritizing strong data security and oversight to protect client data and maintain service quality. Success hinges on a solid foundation, strong underlying systems, clean data, and a culture capable of managing change. Firms are fostering an innovation mindset by encouraging experimentation with tools and investing in skills development to ensure AI is woven into every workflow. Looking ahead to 2026, significant investment is planned, with major firms allocating billions to AI initiatives. However, regional leaders are adopting a more cautious, observational stance, waiting for the environment to stabilize before making large commitments. The consensus among top executives is clear: resisting this change is not an option. The future of the profession will be defined by firms that embed AI as an enterprise-wide capability, fundamentally transforming how value is created and delivered. ARM Holdings plc, a global semiconductor intellectual property company specializing in energy-efficient processor architectures, experienced a downturn in midday trading on Monday, with shares dropping 3.8%. The stock traded between a low of $198.35 and a last traded price of $203.26, with approximately 6,630,102 shares changing hands, marking a 9% decrease from the average daily volume. The stock closed the previous day at $211.18. Market sentiment surrounding ARM remains active, with several research firms issuing updated analyses. Susquehanna recently raised its target price from $170 to $210 and maintained a positive rating. KeyCorp reiterated an overweight rating, while Royal Bank of Canada increased its price objective to $175 with an outperform rating. Raymond James Financial upgraded the stock to an outperform rating, setting a $166 target price. Conversely, Evercore cut its price target from $215 to $170 despite maintaining an outperform rating. Across 18 research analysts, the consensus rating for ARM is a moderate buy, with a consensus target price set at $176.71. $6 analysts maintain a hold rating, and one has assigned a sell rating. Key financial metrics for ARM include a 50-day moving average of $148.60 and a 200-day moving average of $137.34. The company holds a market capitalization of $214.75 billion, a price-to-earnings (PE) ratio of 271.01, and a PEG ratio of 9.52, with a beta of 3.4. In terms of recent performance, ARM reported quarterly earnings on February 5th, posting an earnings per share (EPS) of 43 cents, slightly exceeding the consensus estimate of 41 cents. Revenue reached $1.24 billion, beating expectations of $1.23 billion, alongside a net margin of 17.15% and a return on equity of 14.01%. This revenue figure represents a 26.3% increase compared to the same quarter last year. Insider activity has also been noted. CEO René A. Haas sold 23,867 shares on March 25th, decreasing his direct ownership stake. CFO Jason Childs sold 21,280 shares on the same date, reducing his holdings. Over the last 3 months, insiders collectively sold 83,712 shares worth $13,614,730. Institutional investor activity shows varied engagement, with several firms, including Gray Fox Wealth Advisors LLC, Syntax Research Inc., and Strategic Investment Solutions Inc., IL, making recent purchases in the stock. Institutional investors collectively hold approximately 7.53% of the company's stock. ARM operates by licensing its instruction set architectures and core processor designs, serving as a foundational technology for various computing devices. Its product portfolio spans CPU core families like Cortex and Neoverse, GPU and multimedia IP, Mali, neural processing units, Ethos, and system IP blocks.